under the accounting for agriculture. So this is where someone is trying to do a business of agriculture. And when you're doing a business, you can have some departments with your business. So each department you can create its information so that you know how much is the profit or the income coming from that department. So the question to decide to direct you, which department can you create? So if you read the question, it says that the following trial balance was extracted from the books of David Wekesa, a farmer, as at 31st October 2019. Then the inventory on that day, the opening ones, we have the dairy cattle, maize growing, dairy cattle feeds, fertilizers, land and buildings, tractors, net book value, other cattle bulls, carts, the net book value, purchases, dairy cattle, fertilizers for Napier grass, and for the maize. Then we have the maize seeds, dairy cattle feeds, milk, those are the sales. Dry maize, green maize, dairy cattle, manure, labor, that is the crop expenses, then other expenses, Napier grass labor, general expenses. Then we are given the trade payables, capital, cash at bank, dairy cattle expenses, medicine, labor, and other expenses. Then we have additional information, inventory on the closing day. We have dairy cattle, maize growing, other cattle, dairy cattle feeds, fertilizers for planting maize. Then additional information number 2, during the financial year ended 31st October 2019, the following distributions of farm produce were made. Product, maize consumed by family members, milk delivered to relative hotels. Then the manure valued at 600,000 was removed from the cow shed and used in the maize plantation. Maize stock valued at 1.5 were used as dairy cattle feed. Cattle bulls were used for pulling carts. Depreciation is to be provided on tractors and carts on the reducing balance method at the rate of 25% and 12% per annum, respectively. Then the income tax estimated for the year is 3.6. Then required revenue account for the year ended 31st October, income statement, and the statement of financial position. So that means the revenue account is the revenue that is coming from the departments of this type of agricultural business. And if you can see, there is somewhere a corner livestock, the dairy cattle, those one can be represented by livestock. Then there is somewhere we have the maize. So the maize, I can go with the crop, that is the crop. So I identified 2 departments. So that is department, dairy, cattle. This one I'll go with is livestock. So this one I'll take to any information for the dairy, I'll take to the livestock department so that I get its revenue. Then there is also another department here. That is maize. So this one, I take it to the crop department. So those are the 2 departments that I've identified. So let's start with the livestock department. So anything with the cattle, peleka tu kwa livestock. So you just come here, say, right, livestock department. livestock department. So we can create 2 columns. And remember the shillings have been put into thousands. So first of all, you have to check in the trial balance of the question, what are the sales that is coming from this department known as the livestock. So you go to the trial balance to angalia the sales that you can identify which can fall under the livestock. So what are they selling? So sales. So from our trial balance, let's go to there slowly by slowly in our trial balance. Under the sales, I have the first one is milk. Milk can go under the livestock. So I bring milk here. The value of milk being sold is 27,360. 27,360. Then I try to check if there is also another sales that can falls under livestock. I have dry maize that is not a livestock. Green maize. I have dairy cattle. That one can come here. So dairy cattle. So my dairy cattle is coming at dairy cattle, 8,100. Then still under the sales, I have manure. Manure can come from the livestock. So I have manure. So the manure is 3,000. 3,000 is our manure. And the sales zimeisha. So you can now add all of them. We get the total sales. So this one is our total sales from livestock during the year. That is our sales. So once you get to your sales, now you go to the cost of sales to be deducted. So you can say less. Our cost of sales, that is how our inventory is moving.
Dairy cattle was 54,900.
You start with opening
Opening.
inventories. So you can check them inside the trial balance. Have you checked them?
Yes.
So dairy cattle of how much?
54,900.
So dairy cattle 54
900.
900.
They closed with 54.
Then maize growing dairy cattle feeds. Dairy cattle feeds of how much?
2520.
2520. Fertilizer, no. There are only those two.
Then they had purchases.
So give me the purchases for the year under livestock. So add
Here
purchases.
we have 10 for 40.
What are they adding as our purchases? The first purchases is
Dairy cattle for 10 for 40.
dairy cattle.
And dairy cattle feeds.
So that one is 10. 10 for 40.
Yes.
Then after 10 for 40, we have
Dairy cattle feeds.
dairy cattle feeds.
120.
Dairy cattle feeds of how much?
6120.
Dairy cattle feeds 61?
20.
6120. Only those. So get their sum. So the sum is coming that way. So this is now the what is in the stock. We can call it goods available for sale. What they want to sell. Then now at the end of the year, how much is remaining? So you have to less. What is remaining in our stock? Less closing inventories. Less closing inventory. So that one is always you check additional information. So additional information number 1. Inventory as of 31st October. The closing day of the period is dairy cattle. Dairy cattle of how much?
54,000.
Dairy cattle of 54,000. Do you have any?
Dairy cattle feeds.
Dairy cattle feeds.
1620.
Of how much?
1620.
Dairy cattle feeds 1620. There any other?
And other cattle bulls.
Other cattle bulls. Other cattle in bracket bulls.
Yeah.
Okay. So for the other cattle bulls, can you try to read note number 5? Cattle bulls are used for pulling carts. So whatever is in your stock is not whatever you're supposed to use. Whatever in your stock is supposed to sell it. And remember, these bulls are pulling the carts. And the carts, if you go to trial balance, the carts are being have a net book value, they are non-current assets. So those bulls, I'll recognize them as non-current assets, not as the stock. Okay? Stock is what is the goods that you are selling to your customers. So this one are used to pull the carts. Maybe they are doing something for the business. So that is an asset for the business, not the stock. So how much is now be there our final cost of sales? Is it that way?
18 to 60, yes.
So sawa. So that it give us gross profit. So the gross profit is your total sales minus your total cost of sales. So this is our sales minus our cost of sales. Give us a gross profit of 2,100.
Have expenses.
Then from the gross profit, you can try to check if there are certain incomes so that we can earn them. So the first incomes you can check. Okay. If there is any product from the department delivered to family stroke relatives, it's like they are selling to them there. So that will be an income. Or if the department has transferred a product to another department. So those are the only things that we try to check. If maybe some meals were sold to the family or family consumptions, those are incomes to the department. Again, if the department has transferred some product of it to another department. So you can go to additional information, try to check if there is one. Cindy. So if I go to note number 2 from the additional information, during the financial year ended 31st October 2019, the following distributions of farm produce were made. So maize consumed by family members, so maize is under the crop. Milk delivered to relatives' hotels. So there is a certain income to be given there. So you can say add incomes. So my first income is what has been delivered? Milk delivered to relatives' hotels. So it's like they are selling to their relatives. So how much was delivered to relative hotels? 43? 43.20. Then you can try to see if this department, this crop, this livestock, will transfer something to the another department which is yes to this to do. Note number 3 says manure valued
was removed from the cowshed and used in the maize plantation.
So the manure is from the livestock. So there. So they are selling it to the maize. So manure transfer to crop department. How much is it?
100,000.
600. Then number 3 is about the maize. So cattle bulls depreciation income tax. So I don't see. So how much will be our total incomes from the gross profit? Our total incomes is that one. So at the moment, you can call this one total incomes. Then you less expenses, only expenses that is relating to the livestock department. That is the only thing that you less. So less expenses. So you can just write note that one. If a department received a product from another department, it is treated as an expense, to the department. So if they receive something from the other side, that will be their expense. So an additional information, is there anything that they received? They received something in note number 4. Maize stock valued 1.5 were used as dairy cattle feeds. So maize stock from crop department. So they receive a maize crop of 1,500. So that is an expense to the livestock department. Then
Dago,
yes.
I want to read what you've written there on income. Just scroll up, down. See if there's any product from the department.
If there is any product from the department delivered to the family relatives, if the department has transferred a product to another department. So if I'm transferring something from my department to you, to me it is an income, but that department receiving it is an expense. But the reason why I have said this one here, if a department received a product from another department, it is treated as an expense to the department. So if you check that note number 4, the dairy cattle are receiving something from maize. So that is an expense here. Then you try to check if there is others. So depreciation, that is for the general income statement. So an additional information I don't see. Let's go back to the trial balance and try to check if there is any expenses that can be relating to the livestock. So are you able to see something down the last things in the trial balance, the dairy cattle expenses? Dairy
Medicine, labor, and other expenses.
Dairy cattle expenses. The first one given is what?
Medicine.
Medicine. Of how much?
Of
1080.
80 years.
The next one is
Labor,
labor. Of how much?
9480.
9480.
And other expenses,
Then others. Of how much?
1440.
1440. Then cash at bank, capital, trade payable, general expenses, Napier grass, crop. There is none. So let's get their totals. So that is their total. So how much is the revenues from this department? So revenues. You pick the total incomes minus the total expenses. You remain with 11,520. So we are done with the first department. We go to the second department. You're okay?
Yes, I'm okay there.
So the second department, you can call it crop department. So we call it the crop department. So it will be our crop department. Then same stories, you start with the sales. So you go to your trade balance, check the sales that can go under the crop. So everything for the maize will be taken under the crop. We start with the dry maize.
Yes, our dry maize 36.
36.
Green maize 11,340.
Then we have green maize.
Green maize 11,340.
So green maize 11,340. The next one.
I think for sales, that's all.
Dry maize. There are only two.
Yeah.
So add all of them, get their sum. So this is the total sales. Then you go to our stock. We adjust our closing stock and the cost of sales. Cost of sales.
Cost of sales will have opening stock
Opening
of
stock.
maize. Of maize, we have 3600.
Opening inventory. The first one is
Maize.
just maize.
Maize in brackets growing.
So maize growing of
That's
how much?
Maize 600.
3600. The next one,
Fertilizers for maize.
fertilizers. Fertilizer for maize. How much?
1980.
1980. The next one,
From there we have purchases.
purchases.
We have fertilizers.
Add purchases. So our first purchase is
These purchases for Napier grass. Are we to add for livestock?
that is Napier grass, that is a crop. You can just call it a crop.
Oh, okay. So fertilizers purchases we have 2160.
So fertilizer there too. Fertilizer. The first one is
2160
for maize.
Yeah.
So for maize is how much?
2160.
2160. For Napier grass.
For Napier grass is 4,000.
4,000.
Then we have maize seeds.
Maize seeds.
1080.
Maize seeds. 1080.
And then dairy, okay, yeah, that's it. Then we go to
Only.
closing,
Something.
closing stock. We have for maize 2700.
Are goods available for sale? Is that amount? So you can less closing stock.
We have maize growing.
The first one is
The first
maize
one is
growing.
maize.
Maize growing of how much?
Maize growing is 2,700.
Subtract that one. The next one.
Next one, we have fertilizers for planting maize.
Fertilizer.
For planting maize.
How much?
1080.
1080. Then Then only those ones.
Yeah.
So how much will be our cost of sales? So that is our cost of sales. So you can get our gross profits. And you don't forget whatever you transfer to your relative is your income. So there are certain things that was transferred to the relative in addition to number. Addition information number 2, milk, not milk, maize consumed by family members. So you have an income there. So add incomes. Add incomes. You're being told there is a maize consumed by family members. So maize consumed by family members. So the maize consumed by family members is 1080. Then if I check this department here under expenses, there is a maize stock from the, so they transfer some maize stock to the crop, to the livestock. So that is an income to them. So maize stock transferred to is an income to them. So maize transferred to livestock. So whatever they transfer to livestock is like they are selling to the livestock. They transfer 1,500. And that is the only information given there. So total incomes will be how much? Total incomes will be that amount then less expenses. So whatever they receive from will be treated as an expense. There is something that they received from the other department.
The manure.
They received manure, 600.
Yeah, 600.
So manure from crop department, 600. There's an expense to them. $600. Then you go to the trial balance, try to check any income that can be applicable under the maize only. So we have crop expenses in the trial balance. We have labor, other expenses, and we have Napier grass tenor labor. So crop expenses.
Crop expenses, we have labor.
The first one is labor. Labor of
6480.
6480. Then you have others. Now that is coming 720. Then there is labor for Napier grass. So Napier grass labor
1000.
1000. The general electricity for the income statement. So I don't see anything remaining there. So you can get the totals. So you get the revenues from this department. So it will be incomes minus expenses. So that is the revenues from this department.
Yeah.
So that means now you have done with the first part, the revenues account. We have done with the revenues account. So we can now go to the income statement. So the name of the business is the following trial balance was extracted from the books of David Wekesa, a farmer. So that is the name that I can use under the heading of our income statement. So this one you can say for the year ended the last day of the trading period. The last day is 31st October 2019. That is the last day of the trading. So the first thing to bring here is the revenues from each department. So livestock. So those are the first things you bring in. And you get their total. So those are our total revenues. Then try to check if there is some incomes which are generalized, something like discount allow received. That is a generalized that one. So if I go to my additional information, number one is about inventory, two is about those things that we have already adjusted in the trail in the departments. 3 and 4 again. 5 is the cattle bulls. Depreciation is an expense. Tax is also an expense to the business. So there is nothing there as an income. From my trade balance, the easiest way to check an income, look the values appearing on the credit side. So from 27 to 3,000, those are sales. Then trade payable capital. So there is no any income. So I can less expenses. Then start with additional information for adjustments. So additional information number 6, depreciation is to be provided on tractors and carts on the reducing balance method at the rate of 25% and 12%. So you have depreciations. And the depreciation, we are told it is reducing balance. So I have to use the net book value. So if I'm not given net book value directly, take the cost minus accumulated depreciation. If you're given, like the one given here, the tractors in bracket net book value. So just multiply directly. So tractors. Tractor, they say it is 25%. And the net book value in the from the trade balance, 32,400. So that one will give me a depreciation of 8,100. Then 12% for the cuts. So the net book value for the cuts is 3,000. So it's give me 360. Then in note number 1, you're given that other bulls by the end of the year, other cattle bulls, the value is 5,400. But if you go to the trial balance, other bulls, how much is the value? In the trial balance, the value is 6,000.
Yeah.
But at the end of the year, it is 5,400.
Oh.
So there is a certain figure that is missing there, isn't there? I can just say other bulls will lose value like depreciation. So other cattle bulls so I have 6,000. And at the moment now it is 5,400. So that difference is like a depreciation or the loss of value of 600.
We'll write loss of value.
So he'll recognize it as an expense because it has disappeared. We don't know where it has disappeared to. And there was no disposal of any bull. Then so and additional information, I don't see any. Can you go to the trial balance? Are you able to see something written in general expenses?
It is general expenses for 10,800.
10,800. And it is only that one. So how much is the total expenses? So I have seen there is a tax there. So this one you can call it profit before tax. You can say that this is profit before tax. Because I've seen there is a tax estimated for the year. So you have to pay tax. That's less. Income tax estimated. So how much have they been estimated to pay it? The last note, number 7, income tax is estimated at 3.6. So how much is our net income?
So
20,140. So that is the income statement, the general one. So you go to the last part, that is statement of financial position. So the non-current asset, the cost, accumulated depreciation, then the net book value. So inside the trade balance, and we have land and buildings, that is a non-current asset. So the value there is 90,000, and there was no depreciation. So the value remains the same, 90,000. Tractors. So the value before you calculate depreciation is 32,400. Then we add a depreciation in the income statement, 8,100. So our net book value will be equals to this one minus this one. Then other kettle bulls. So you are given 6,000 in note number 6,000. But we're being told that at the end of the year it is 5,400. So that means you'll lose value by 600 as depreciation. Then you have cuts. The cost of cuts is 3,000 here. Then they depreciated by 360 during the year. So at the end of the year, the new value will be this one minus depreciation for the year and accumulated one. I don't see any, so can you add the total net book value for the year? So that is the net book value. Then you go to current assets. So current assets.
We have
So,
cash at bank.
all the inventories at the end of the year, those are current assets. So inventories at the end of the year. Number one. The first one is
Dairy,
dairy cattle. They close with how much?
oh,
They closes with 54. The next one is
growing
growing.
2,700.
2,700.
Bulls are the cattle.
That one is a utility as an asset, so you skip it. Dairy cattle feeds. Dairy cattle feeds. $1,620. Then fertilizer for planting maize.
Fertilizers for planting maize. 1080.
Then 80. Then you can check if you have the receivables, your debtors are your current assets. Do you have any receivables from the trial balance? No receivables, no prepayment. Do you have cash at the bank or cash in hand?
15,300.
You have cash at bank. There is an asset. 15,300. I think it is only that one, so I don't see any.
Then we have capital. Capital.
Huh?
We have capital.
Capital.
Mm.
So I can get our total assets. So that is our total assets. Then we start at our equity and liability. So I given capital.
You are given capital at 1
Capital of how much?
Capital is 163,080.
Capital of 163,080. 63,080. Then we make from our income statement, it was a profit, isn't it?
Yes.
So add net profit. $21.40.
2140.
2140. Then family stroke relatives consumptions are treated as drawings in the balance sheet. So it's like you make some personal drawings in there. So the family structural consumption, all of them will be treated as the drawings. So they reduce our capital. So less drawings. There's something that was consumed by family members in there.
1.5.
Kulikuwa na milk and maize. Maize stroke milk consumed by family stroke relatives. The total, already have seen there is a total there. If you're not given the total is 5,400. So I'll subtract 5,400. So how much is remaining here?
We have trade payables.
Trade payable. Do you have the long-term loan?
No.
No. So I go to current liabilities. So your creditors is your current liabilities in there. That is the trade payable. How much is the trade payable? Trade payables of how much? So it will be trade payable. Trade payable of 15. 620. 15,620. The bank was not an overdraft. There was no any accruals as an expense, but tax was estimated, isn't it? So accruals. When tax has been estimated, that means you have not yet paid it, so it is still accruing, isn't it? So estimated tax. How much was estimated to be paid? 3.6. So it is accruing, not yet paid. So it is still accruing. If there are only those two. So total here is how much?
57,040.
So total equity And liabilities is how much?
Seven.
So iko sawa. And you're done, just like that one. So that is how you can do accounting for agriculture or farming.